Good morning, everybody. Mike Tedeschi over at Perspective Wealth Planning with this week's market breakdown video. We're going to take a look at the four major U.S. indexes. We're going to take a look at some breadth readings. We're actually also going to check in with a couple of different commodities that are at some very important key levels in this week's video. Let's jump right into it. First and foremost, let's talk about the S&P 500. I have a weekly chart up here. We've done this in the past where I talked about the angle of attack since this breakout. If we look at the essentially the line that we had before that breakout, we had about a 45-degree uptrend. Since that breakout that we've got, do you see how much steeper this angle of attack is? We typically are not going to be able to continue that angle for that long. And in fact, the last time we had an angle like that was in the beginning of 2018, where we had a very, very sharp move to the upside. And eventually, that resulted in us having a pretty quick sell-off. Now, are we at a spot where that's going to happen right here? Well, one of the things I like to take a look at, and we don't talk very much about it in these videos, is the Bollinger Bands. Right? The Bollinger Bands are essentially a way of looking at the market as price should stay in between this upper and this lower line the majority of the time. There's two standard deviations of price away from the 20 moving average is typically how Bollinger Bands are set up. You'll notice what happened back in 2018. We got above those Bollinger Bands. Right, so that angle of attack was so steep that we got outside of our normal two standard deviations of where the market essentially should trade in terms of price. And if we go back and we look at a lot of the time that price falls outside of the Bollinger Bands, right, and marks kind of a zone where we see a move in the opposite direction. Especially down in here. So we're actually still trading inside these Bollinger Bands. So even though this market has a very strong upward trajectory and may seem like it's kind of out of control, we're still inside those Bollinger Bands. So the key to look at this and go, wow, things are really getting out of control, would be as if we push through these upper Bollinger Bands on a weekly basis. And so I'm continuing to watch that under the surface. If we do find ourselves in a position where we get that stretched, I will certainly let you guys know. We zoom in here and we take a look at things on a daily basis, right? Just, again, really good technical action, right? We had a pullback to where? Support and the 50-day moving average, and then we immediately push ourselves back above it. We're above the 10, 20, 50, 200-day moving average. Nasdaq, same thing, really sharp, strong, good price action here. The Dow Jones here, same thing, right? And these lines we drew last week, we broke above it the other day. So, again, we have great technicals on a short-term basis out of every index except for, of course, the Russell 2000. We're still below those highs. We're still above that key level that we have circled over here. We're looking at that 17,000, 17,020 zone as a very, very important area to continue to pay attention to. So we're going to continue to watch that. We take a look at all the breadth readings in pretty much every video, so let's jump in and take a look. We talked about this in our last video. We really wanted to see what price was going to do on this breadth reading right in this zone, right in here. And if we started to make that stop and turn back to the upside, that would be a very good spot. And if we continue to fall, would be a very concerning from a breadth reading perspective. So we kind of stopped right where we wanted to, so to speak. This is that kind of zone again. And we have subsequently turned back up here over the last couple of days. Now, does this hold and do we start to turn all the way back up? That's what we're paying attention to. As you know, a lot of times it is not just an immediate turn and run the other direction. There usually is a little bit of consolidation that happens before we get our ultimate move. So we're not quite out of the woods just yet, but if you're looking at the breadth component, we did start to turn back up above that zero zone and in an area where previously it was important. So that does look good for the time being. That we are getting a gap down here on the 13th with some more fears from coronavirus, which could, of course, cause that breadth reading to flip back negative again. We'll take a look at that next week for you guys as well. Since we've been tracking this here pretty diligently over the last few weeks of videos, we've talked about the smart money, dumb money confidence and how it needed to come back down to a more normalized level, right? We subsequently have had that essentially happen. We're still looking for that cross back there at the midline, but this has been very constructive from a really, really extreme reading to back down more into a normalized zone. So that extreme sentiment component that we have had an issue with here for quite some time is subsequently abating a little bit. So that's one thing that we can chalk up kind of as a positive here for the bulls. Now let's jump in and let's take a look at two different commodities. I want to take a look at gold here in today's video, and I want to take a look at oil. Gold we have talked about a number of times here over the last year or two, and one of the ways that we can take a look here at this is we can look at this as a cup and handle and a breakout. And so really, if you're paying attention to that gold market, you do want to see a weekly close up over 1600 an ounce. That would be very, very constructive and very, very bullish. So we're continuing to pay attention. When you look at this in on a monthly chart, again, you can see that big long cup, a bull flag here, and a subsequent push higher. So we do need to break really up over that 1600 level. And if you pay attention, that's really where all the trouble started, when we broke underneath of that back in 2013. So a very key level that we're basically trading right underneath of here. So we're going to continue to watch that zone for you guys as well. Now, oil. Let me clear all these drawings out for you guys, and let's take a look at this on a 20-year monthly chart. Now, first off, we know that there's price action and resistance at that 75, 76 level. We talked about it a lot. That was where we had our major breakdown, essentially back in 2014. We've traded under that since that time. Now, we had a constructive bottoming process that got put in. We pushed up, and then we have fallen back down. Now, the major level that's on here is, of course, that 40 zone. Besides a couple of months here in the really depth of that sell-off, we traded underneath of it. In fact, even if you go back to 2008, 2009, we had some candles underneath that zone, but we came up and we closed above that level. So this is that major price action level on a monthly chart, is that 42 zone. We're a little bit above that right now. Now, when we zoom in and we look at the price action that we've seen here over the last couple of years, you get a very important level also that comes out on that 50 zone, right? That's where we first fell and we made a little bit of bounce, broke underneath, tested that 40 zone, and then came back above. And we have stayed over that 50 zone since then. So, important key level, and that's right where we're at right now. All right, very sharp sell-off from the potential outbreak of World War III concerns that we had earlier this year with the bombing overnight. From that point forward, we have just straight sold off in oil. Now, if we look at this in on a daily chart, all right, we're acting like we're trying to put a bottom. This does not mean that this is actually going to bottom, but we can see that we've got about a week or two of price action inside this level, trading right around that major 50 zone, and price is starting to get back up for the first time here over that 10-day moving average. Now, all the moving averages are still pointing down to 10, 20 to 50, right? This is not a healthy sector by any stretch of the imagination, but we have two major levels, and that's the reason why I wanted to point this out in today's video. That 50 zone in oil is very, very important. If we lose that, I would fully expect us to go down and test that 42, 43 low zone. Right? If this holds right here, I would look for that constructive move back up. Really, the way that you can look at it over the last 2 years is at a trading range between 50 and 65. So here we are at the bottom of this trading range. Let's pay attention to what happens here. That is very important. As always, guys, I hope you have yourself a fantastic week. I'll be back with you guys next week. If you have any questions, you can reach out to me directly at Tedeschi at Perspective Wealth Planning or at 814-580-9881. I hope you guys have yourself a fantastic week. I will see you guys next week. Take care.